Hey traders, I just want to bring your attention to euro dollar on the weekly time frame. It's been a while since we've really seen any opportunity of note on this currency pair. However, as we go through this analysis, hopefully you'll see what we're seeing and why we're looking to potentially buy it on the weekly time frame. So let's get a bit of context before we get straight into the pith. As we can see, taking the Fibonacci retracement from 2016, the low here, to the most recent height seen around this time last year, March 2015, we can see that price has had a second rejection or near enough to the 0.618 Fibonacci retracement. There we go. So we saw the last rejection here November last year. Now we've got a second one just shy of the 0.618. So last week closed as a bullish pin bar reversal, but not just any bullish pin bar reversal. This bullish pin bar reversal really did represent the point D from this A, B, C, D formation, which is a harmonic three wave pattern, and whenever we get the D point, that constitutes as a valid reversal point. So let me just zoom in and show you exactly where we're seeing this. So if you think of it like a thunderbolt, we've got the point A, point B, point C, point D. So it's like a zigzag three wave harmonic formation. So if we drag our Fibonacci extension tool from point B to point A, we can see that we do have, and do it properly, 1.272 just about rejecting last week's low, which is significant because if we look at the recent consolidation euro dollar has been in, this consolidation really has given us a range to play with. So an entry at the high of last week's low with a stop loss below last week's low represents a valid entry point in the bottom kind of third of this range here. Now, if we were to get long on this one, and we do have decent evidence to suggest, looking at the RSIs, you can see the RSI is making higher highs and higher lows, more crucially, whilst price is moving sideways. But looking at this, we've got a decent small bar to take advantage of. We've got a decent entry, and if you wanted to be aggressive, then you could put your stop loss below this week's low. However, in the interest of being careful, I would say that it's probably much more efficient to put your entry just below last week's low in the interest of safety, given that the very nature of a pin bar reversal is where, as the tip of this tail has rejected near enough the 618 Fibonacci retracement, it was at the point where, when the bears came down to this point last, the bulls overcharged them, just like what happened here in November last year. Okay, so that is the euro on the weekly time frame. We've been consolidating here for quite some time, since October last year. So based on what's happened before, we've got no reason to believe that the euro dollar is going to do anything other than do what it has been for the past 3-4 months, i.e. oscillating in this kind of box here. Let me just draw it on for you. So we've got this kind of box right here. There we go. So what we're simply doing is buying a buy signal towards the bottom of this box. So just to recap, we will be trading this along with our entry above last week's high, with our stop loss below last week's low. If you wanted to be aggressive, you could have your stop loss below this week's low. However, with that extra risk comes reward. And when I say extra risk, I'm simply referring to the distance between your entry price and your stop loss. You are not giving the market as much wiggle room to potentially go against you for going in your favor. However, if the euro does strengthen against the US dollar, then at least you will have a very tight entry indeed, and that will be good for reward to risk. So if, as and when we are triggered into the trade at the break of last week's high, then we'll simply wait for a 1-to-1 and scale out half of the 1-to-1, and then anticipate potentially taking profit round about here. That's round about a 2-to-1. Let's get our profit shooter out and just measure this for you. So if we just, like I said, have the entry above last week's high, stop loss below the low, and we have our ultimate target, our second target, around about here, that'll be fine. However, what we'll be doing is we'll be scaling out at a 1-to-1. So if we go down to a 1-to-1, there we go, around about here. Okay, if next week or this week closes as a bearish pin bar reversal, or we have an alert warning in that sense that we get a bearish pin bar reversal after we do see a spike to the upside, we'll be moving our stop loss from the low of this week, or last week, sorry, and then moving it up to potentially the low of this week. Okay, so this conforms really to what we're seeing. Risk on, this theme which we're seeing, despite all the analysis out there that says stocks are overbought. We can see here that the Dow 30 is marching all the way to all-time highs, which we saw in October last year. So correlations typically reveal that euro dollar will follow this. So that's euro dollar on the weekly time frame. Happy trading, folks.